Well, hello everyone and welcome to Momentum channel. My name is Mo, and in this video, as part of our weekly stock investment challenge videos, we are going to take a close look at how we've been able to grow our stock investment portfolio with the goal of ultimately growing it to $250,000. In this week video, we are going to start off by taking a close look at a couple of stock market news, including the latest quarterly earnings report from Bank of Nova Scotia or Scotiabank, which we also have this bank as part of our stock investment holdings in our account. We're going to take a closer look at the J.D. Power retail banking ranking that is referenced as well as part of the statement released by the Scotiabank. And lastly, of course, as usual, we walk you through the overall portfolio that we have here with Wealthsimple Trade, exactly release and review our stock holdings, the latest return, overall number of holdings that we have in our stock, as well as any of our dividend income, as well as any stock purchases or stock sales that we've had over the past 1 week. We'll share that with you transparently and walk you through as well some of the thought process behind why we make some of those decisions and how we go about investing approach in the week ahead. All right, so let us get started. As you see here on the screen, this is the news about Scotiabank revealing its latest financial results, which was actually released a few days ago. As part of their financial results for the second quarter of the year 2021, they saw a net income of $2.46 billion, which is approximately an 86% increase from $1.32 billion in the same period last year. So if you compare the Q2 of 2021 to Q2 of 2020, they see a 86% jump there. Moreover, you'd notice here that for the bank, their diluted earnings per share saw an 88% increase from last year, as it moves from $1 per share to $1.88 per share. And you also notice that the bank is showing an adjusted net income of $2.48 billion and an EPS of $1.90 per share, up 83% from the previous year. In reaction to that, overall, it's worth mentioning that the Scotiabank's president and CEO Brian Porter said that the results demonstrated the resilience of the bank's business and noteworthy recovery in the core markets. He also indicated that their commitment to superior customer service was recognized in the J.D. Power 2021 Canada Retail Banking large banks and as well recovery in terms of their performance. Moreover, the Tangerine Bank, which is ultimately actually owned by Scotiabank as well, has been consecutively ranked as number one for 10 years now in the category of mid-sized retail banking. So those are some of the kind of reflections that the CEO of the Scotiabank has had. And if you look at closely at the release by J.D. Power in terms of satisfaction with big 5 banks in Canada as well as the mid-sized banks, you notice here that for the big banks, Royal Bank of Canada actually is ranked as the highest in satisfaction among the big 5 banks in Canada, followed by Scotiabank that has jumped to now second spot, and the third spot is actually TD Canada Trust. As for the mid-sized banks, Tangerine Bank is ranked highest, has been indicated for the 10th consecutive year, followed by Simply Financial, and then after that we have ATB Financial. There you have it, a quick look at Scotiabank's quarterly earnings report, their last quarterly earnings report, as well as how they're doing in terms of their quality of customer service. With that, let us move over to our account here with Wealthsimple Trade and take a closer look here. You notice our total overall balance in this account is now sitting at $16,696. Our 1 month return is showing to be 2%. Our 1 week return at this account is showing to be fairly stagnant. It was up by $71. Our 1 day return for the last trading day before the weekend was up by 1%. If you look at the longer term period for the 3 months, it's also showing a 3% return. And again, our 1 year return, which is our longer term return here and showing a much more decent return, is showing to be a 33% return. If we look at the all-time return for this account, obviously this account has been opened, I believe, for now a couple of years. All-time return is showing to be at 41%. But we started from very humble beginnings. That's the whole mantra and approach here. The whole goal is to grow this account from a mere $5,000 at the beginning days all the way now to $250,000, and we're going to show you how we intend to do that and what type of holdings we have and what's our investment strategy. With that, let us move ahead and take a close look at our holdings. You notice here we are still maintaining our shares of Apple. We have 6 shares of Apple. Now it's showing a positive return of 8.53%. Bristol Myers, we are maintaining our 7 shares and it is showing a return of 25.67%. Next, we have Bank of Nova Scotia, as we talked about it. And here we have 15 shares. It is showing a return of 25.26%. Salesforce, we have to maintain our 3 shares and it's showing a positive return of now 15.98%. Corsair Gaming, we have 9 shares and it's showing a negative 13.52%. We have a number of Emerge ARK Invest ETFs, EAFT, Emerge ARK FinTech Innovation ETF. We have now 14 shares. It is showing a negative 8.32%. EAGB or Emerge ARK Genomics and Biotech ETF. We have 27 shares and it's showing a negative 11.71%. And lastly, we have Emerge ARK Global Disruptive Innovation ETF. We have 40 shares and it's showing a negative 12.59%. We've been continuing to add to our shares of Emerge ARK Invests. We're going to take a look at it in a moment, but as they are in the negative territory and as we believe in the quality of ARK Invest ETFs and the companies that are actually invested within those ETFs, we are gradually adding, especially on the days that the value of the price of this ETFs actually decline. We try to add more to our shares and you can see how the numbers are growing gradually. Gilead Sciences, we still maintain 4 shares of this pharmaceutical company. It's a dividend paying company and it's actually showing a 5.21% return. HCLN or Harvest Clean Energy ETF, we are gradually adding to our ETF shares here too. We now have 24 shares and it's showing a negative 5.60%. Pfizer, we're maintaining our 21 shares. It's showing a positive return of 19.94%. With Pfizer, we just actually received a dividend income this over the weekend, so we're going to take a look at it in a moment. Palantir Technologies, it is now showing a positive return of 9.23% for our 10 shares. Pizza, fairly stagnant. Our 5 shares is showing a 0.85% return. It's a monthly dividend paying company in Canada, and we are maintaining those shares for now. Qualcomm, we are showing our 8 shares showing a positive return of 11.06%. Real Matters, we made a video about this and why we have been buying and adding to our shares. We are still maintaining our 158. If the price of Real Matters continues to decline a bit further and gets more into negative territory, we would continue to add more to our shares. For now, we have 158 shares and it's showing a negative 2.63% return. Royalty Pharma, it's now back into the positive territory. We added 1 share a couple of weeks ago. Now we have 30 shares and it's showing a positive return of 3.55%. With Royalty Pharma, they do pay a dividend, quarterly dividend. The dividend payout yield is not necessarily the highest. Nonetheless, it's a solid dividend paying company that we would like to maintain and hold on to for that quarterly income. Royal Bank of Canada, another big bank in Canada. We talked about it earlier, that we have 5 shares and it's showing a positive return of 27%. Toronto Dominion Bank, we have 7 shares and it is showing a positive return of 26.43%. Vanguard FTSE Canadian Capped REIT Index, it's an index ETF in real estate investment trust. We have 12 shares, it's showing a positive return of 16.16%. Verizon Communications, we have 10 shares, it's showing a positive return of 2.81%. BlackRock Canada iShares Canadian Select Dividend Index ETF, we have 5 shares, it's showing a positive return of 28.81%. And lastly, XIT or BlackRock Canada iShares S&P Capped Information Tech Index ETF. This is showing a return of 6.45% for our 16 shares that we own here. Now, let us hover over and take a close look at the activities that we have in this account for our personal account. And let us get started perhaps with our deposits, just to see if we have had any deposits. You notice that we haven't had necessarily any new deposit. The only piece that I would flag here is that we had a referral bonus that we earned. So I'm just going to highlight it here. You notice that the latest referral bonus was actually for the amount of $25 back in March, and we have had a couple of February or January. And the reason I mentioned that is that with Wealthsimple Trade, there is a promotion. So if you haven't tried out Wealthsimple Trade, are interested to get started investing on your own and do that actually commission free for Canadian stocks or ETFs, you can definitely do so. I do encourage you to use the referral link. With that, you and myself, we're both going to get actually that referral bonus, which is currently sitting at $25, which is not bad at all. I've been using it, as I indicated, for several years now. I absolutely love it. You can see I used Wealthsimple Trade not only for Canadian stocks, but also for US stocks. The only piece that you need to be aware of is that if you purchase any US dollar stocks or ETF, you have to pay a slight amount for the conversion fee. So make sure that you're aware of it, but it's perfect for buying or selling any Canadian stocks because there's no charge or fee whatsoever involved here. All right, let us take a close look now at our stock buys. We are looking at first our limit buy orders. So I'm going to quickly walk you through it, what it is. For example, for Corsair, we have an order for limit buy for 31.07 cents if it gets fulfilled. But you can see here what the prices are. All these in price that you see are in Canadian dollars. So for US dollars one, you have to click into it to see what the limit buy order is for this one. So for pound here, you saw the price and all of that. I think the rest of it. And for Verizon, we also have one on $50 as well here, in case it ever hits that price range. All right, but let us take a look at actual buys, what we've bought over the span of the past week. So you can see most recently we've bought one share of Real Matters for the price of $15.84, HCLN $13.95, EAGB $20.52, EARK $19.04, EAFT we bought $18.98, one more share of HCLN, one share of EARK, EAGB, EARK. They're continuing to add those, and a couple of canceled ones or expired ones that you notice here, but the list continues. You notice a pattern. HCLN, Emerge ARCs ETFs are the top ones that we are actually continuing to add and buy more. And beyond that, as I mentioned, Royalty Pharma was the one that we also bought, and a little bit further than that, we bought as well shares of NLC over there. You see a couple of key buys over the span of the past several days. And there you have it. These are our key buys. Let us also take a look at our sells, whether we actually sold anything in this account. So the one that I would flag for you is on May 28th, we actually dumped and got rid of all of our NLC, Neolithium. We got rid of our 76 shares at the price of $2.88. That was our last sell. And the other piece that I would flag for you is if we look at our dividend income. I think that's one that is of interest for many dividend investors. You notice, as I indicated, Pfizer did pay us a juicy dividend of $9.92 Canadian dollars equivalent. We also got paid a couple of dividends. Most recently, XDV, most noticeably, we got paid 48 cents. But look at that Pfizer dividend income. Definitely, that's something that we would love to continue to capitalize on with Pfizer. Solid dividend paying company, been paying its dividend, increasing its dividend for years, and also the company is very solid. So we are interested in adding a mixture of our dividend income companies as well as growth companies, because I think through that mixed approach, you get the best of the both worlds. So you don't want to, in my opinion, just focus on dividend or just growth. But it also, I understand, depends on your risk tolerance, depends on your investment approach, and it depends on your preferences as well as your years, your age and your years remaining to your retirement. So really, it could be very case by case, and depends on your preference and your style of investment. For us, that's the approach that we are taking. Please be mindful that just because we own these stocks in our portfolio doesn't mean that necessarily you have to go and buy the same ones, or we are not recommending that these are all great stocks. We do our due diligence and of course do our research before we buy into these stocks, and have documented that through different videos and explained that. But ultimately, the decision is always yours. Be sure to do your own due diligence, and before buying any stocks that is talked about in this channel or any other channel, make sure to do your own due diligence and really know what you think of the company and whether it is actually aligning with your investment strategy and investment goals that you have. If you have any specific question on any of these stocks that we talked about in this video, or any other question related to investing or financial planning or freedom, be sure to let us know. We'd love to hear from you and hopefully be able to engage in a dialogue and conversation and provide our insight and understanding of it. Love to hear from you. I hope you found this video beneficial and motivational for you to get started with your investment journey and continue to build on it. If you did, love to hear from you, and if you could give that a thumbs up, that would really mean a lot to us. If you haven't done that already, of course, please subscribe to Momentum channel here on Momentum. I would love to have you on board to follow us on our journey to financial freedom as well as investing. Thank you, and I hope to see you next time.